OK, well, we've got a number of slides you kindly sent us. Let's kick off with data released over the European session. What caught your attention this morning?
OK, well, first of all, a couple of bits of data out of the Far East prior to the European Open. First of all, a survey by Bloomberg of economists that cover China found that Chinese GDP was actually likely growing at just around 6.3% in the first half of 2015, and I think slightly higher than that was the idea for the second half. Anyway, that basically is the best part of 10% under the official forecast or official.
But I think the market would take that GDP number well, because there are economic commentators talking about sort of 3%.
Well, it might well be as low as that. I mean, it's very difficult to say how much is double counting and you know, whatever. But certainly, it's the first inkling that that certainly the official numbers are removed from reality, shall we say. And then you also have to wonder about some of the data that's coming out of Japan this morning. We had GDP on an annualised basis in that sort of American style. This is for the second quarter, the year-on-year figure, down 1.6%, which was better than the forecasted minus 1.9%. But you look back and at the admittedly revised number, the prior read, plus 4.5%,
right,
and you think, how on earth did they arrive at that point? So, it's probably not worth spending too much time going back over that, but the problems in Japan are not going away, and we'll be talking about that for a long time to come, I'm sure. Then another country that's not without its issues, but for a different set of reasons, is Switzerland. Swiss retail sales for June, year on year, came in down minus 0.9%, well ahead of the forecast minus 0.6%. But a considerable improvement on the prior read of minus 1.8%. Nonetheless, but the problems in Switzerland are well known, and they're, as I say, the deflationary aspects of their economy are still not going right, it would seem. And then the other big news today, really, although it's not going to actually happen until Wednesday, I don't believe, is that German MPs are going to vote on the Greek bailout. The talk was that Mrs. Merkel had changed her travel plans because she wasn't certain that she should be out of the country, as one or two of her own party members are sort of threatening to revolt against her. A lot of people in Germany will find it quite hard to vote, I believe, in favour of the bailout without IMF support. Having said that, they're completely against the idea of having a haircut, as well. They would perhaps accept extension to maturities and some other help for the Greeks. But so it could be quite a fraught couple of days for Angela Merkel as that bill tries to steer its way through the German Parliament.
Understood.